Hi there, it's David from Kepler Trust Intelligence. Today I'm going to be discussing Greencoat UK Wind, which has the ticker UKW. At over £3 billion, UKW is the largest fund in the AIC renewable energy infrastructure sector. The investment manager is Schroder Greencoat, one of Europe's leading renewable asset managers. The management team is led by Stephen Lilly and Matt Ridley. Stephen has been at the helm since IPO in 2013 and has nearly 30 years of experience in investment management and financing, in addition to 6 years in the nuclear industry. Matt replaced previous manager Lawrence Fumagalli in March, having previously led the private markets group of Schroder Greencoat. He has 22 years of investment management experience. It's worth noting here that Matt has worked closely with UKW ever since he joined Schroder Greencoat in 2021, so there's certainly a big element of continuity about the appointment. I'll also highlight the fact that the other key figures in the investment management team remain unchanged, with the majority of the team having been involved with UKW for over 5 years. In addition to an experienced and well-resourced management team, UKW's board also has a high degree of expertise specific to the renewables and wind-powered electricity generation. Unusually for an investment trust, the board must approve each asset purchased. The investment objective is to provide investors with a sustainable dividend that increases in line with the retail price index measure of inflation, and also to preserve the real capital value of its investment portfolio. The Schroder Greencoat team focuses on 3 broad areas. First, they ensure that each wind farm generates as much electricity as it can in the circumstances, performing detailed and specialist analysis on each asset to maximise the overall wind farm return. The team also focuses on maximising the revenues the trust receives from each of its assets. Third, the team uses the trust's scale and buying power to negotiate the lowest operational costs possible. Now we'll briefly switch over to the UKW website, where you can see a breakdown of the portfolio under this portfolio tab at the top here. Now you can move it down and it's got a list of all of the assets in the portfolio, which you can then click on, and it gives you kind of an overview of the asset and a gallery which kind of brings the assets and the portfolio to life for you. We'll look a little more closely at the breakdown of that portfolio on the fact sheet, which you can find on the UKW website. Scrolling down to the second page, you can see that the portfolio is split 55-45 between onshore and offshore wind farms, with about half in England and 40% in Scotland. The wind farms are well diversified when it comes to their age, and the largest of its assets, Hornsea 1, which is located 80 miles off the Yorkshire coast in the North Sea, accounts for 16% of the portfolio. As an aside, UKW generated 1.5% of the UK's electricity demand in 2023. Now, coming back up to the first page of the fact sheet, one thing to point out is UKW's gearing. As you can see, the group aggregate debt adds up to 39% of gross asset value. UKW is in the advanced stages of refinancing the revolving credit facility that matures in October, as well as other debt tranches. In addition, the managers say that any cash that it gets for selling some of its wind farms can be used to pay down the RCF. You can learn more about UKW's gearing and what it means for you as a shareholder in the latest note on the KTI website. One strength that UKW does have is the dividend. The target of 10p for 2022 would give it a yield of 7.1% on today's share price, and the payout is well covered at about 1.5 times. Moving over to the KTI website, you can see from the red line, which is dividend cover, that the dividend has remained well covered even in 2020 when it was 1.3 times covered. And looking at this blue line, which is dividend per share, you can see that the dividend has risen every year since it was launched, bar one. We can also show that performance of UKW has been impressive. The net asset value total return, which you can see with this blue line, has returned an impressive 77.4% in the 5 years to the 4th of March 2024, compared to 84.8% from the iShares MSCI World ETF, which tracks global equities and is this black line. Of course, the share price has most recently underperformed the NAV, which has created a discount of 12% currently, which is wider than the 3 and 5 year averages. There is a share buyback facility of £100 million in place. About £53 million of those shares have been repurchased at the time of the last update on the 24th of July 2024. In terms of fees, there's a tiered management fee in place, with the investment manager entitled to a cash fee and an equity element, which is paid in new shares issued at NAV with no performance fees. The ongoing charges figure of 0.92% is the lowest in the sector. For more information, do check out the UKW website, and don't forget to read the latest research on the KTI website too. Thanks for watching today, and we hope to see you again soon.
Past performance is not a reliable indicator of future results. The value of investments can fall as well as rise, and you may get back less than you invested when you decide to sell your investments. It is strongly recommended that if you are a private investor, independent financial advice should be taken before making any investment or financial decision. Please be aware that there can be a time lag when we release podcasts, meaning time-sensitive information may no longer be accurate at the time of publication. Kepler Partners LLP has a relationship with some of the companies covered in this podcast, which may impair its objectivity. Kepler Partners LLP is authorized and regulated by the Financial Conduct Authority.